number 1,638. Derivative trading involves substantial loss and is not suitable. Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 13th of November, 2019. It is episode number 1,638. Thanks for joining me today. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is seeing movement of assets into safety. It looks like we're moving out of risk. That the DAX is the laggard this morning, down 78 points or 0.58%. Crude oil's off 36 cents, trading at 56.43. So are the indices. The S&P is off 8.5 points and is trading at the low end of yesterday's range. A couple of interesting structural elements on the volume profile based on yesterday's action in ES. I'll cover that in a minute. Gold's the leader today, up $8, 0.56%. So that's where we stand. The sentiment is risk off this morning coming into the session. In terms of what came out overnight, there were quite a few key releases. German inflation in line. Great Britain inflation slightly lower. Core inflation in the U.S. slightly lower, came in at 2.3% versus 2.4%, and inflation rate is at 1.8, slightly higher than 1.7 expected. We do get Fed Chair Powell this morning at 11 o'clock Eastern. It's 4 p.m. London time. And then after the close, we do get the unemployment rate out of Australia. Pay attention to Fed's Powell's release. We do have Fed's Kashkari after that, but Powell being the Fed chair might say something of interest. So that's where we stand. Let's move on to our review segment. That's interesting. Stand by 1 minute. Looks like somehow I've lost that video. So let me pull it back up. Of course, these videos are always available on YouTube. They remain there after they're live streamed. They're never edited. Anybody can get to them and look at them. And like you, I cannot stand these commercials that have to be played, but that's what you get when using a free service. All right, so let's pull this up here. Here's what was expected for yesterday in our review segment. Primary scenario, open auction out of range. Market may dip into 30.87 and then start walking on to the the overnight high, which was 30.94. The key test area would be 30.92 with the expectation of a push to 3,100 and a drop. That's what I was looking for yesterday. I can go over the other scenarios. All scenarios are looking for a test and take of 30.94. It's exactly what we got. Here we have an open auction right here. The market tests up and down around the open, and then we start pushing directionally. Now it's all about getting long. Of course, I'm not a breakout trader, so there's no participation for me in this impulse higher. However, I am stalking for a long for a break of that 30.96. The overnight high taken right away, and then we immediately push into 3,100. And as expected, was looking for to consolidate around 3,100, the century figure here, and then it rolled over. However, it rolled over quite a bit. We ended up breaking the IB high, the overnight stats done, the IB stats done, and then rolling over below the mid, which is this blue line, and then breaking the IB low, giving us a neutral day. Now, this is a neutral normal day, but I could tell you that at this time when it made that break, it was looking to me like it may be neutral extreme down, and the expectation on neutral extreme down is that we would continue lower into the overnight session. We're likely to start a new one-time framing setup down or trend down, and the target for that I'll go over in a minute. So that's where we stand. Hopefully you can see everything and can hear me nice and clear. Let me know if you cannot. Anyway, so we ended up pulling up after taking the IB low. We ended up pulling back to where? Pulling back to the mid. This is an impulse. You could see it crossing the impulse line. This is an impulse down, pulls back to the mid, but by then it's too late to put a trade on because we had already crossed into the cash close. So that's a kind of a lost opportunity. We reopen, and the overnight high is at 30.92. Does anybody recall what 30.92 was? 30.92 I talked about yesterday quite a bit, and it involves the upper high volume node on the composite. That was 30.92, and it was the key test area. Now, I did expect that a push into 30.92 is likely to consolidate before it pushes through, and it didn't. It just blew right through and ended up consolidating there later. So again, the market traded on both sides of the IB. The IB is right here. It traded both up and below the IB, extended below the IB more than above the IB, so it's not symmetrical neutral. It is more skewed to the downside, and overall and to the downside, we have a distribution yesterday that is very flat. The market tested across the board, and it traded 906,000 contracts versus 1 million or so recently. So overall, participation was pretty good. The delta crossed the zero line pretty early, right in here, even though we were above the open by a fair amount at this point. We're above the open by about 6 points. The delta was below the zero line and was relatively negative. My expectation is that the market's likely to follow through to the short side with a target of 30.73 and a quarter. The composite point of control. Let's look at that for a minute. So let's just hide everything else for a little bit. This is what the market has done. This is an RTH only or pit session only composite chart. Each bar represents 1 day, and anyone can see that the trend is higher. It does have these decent flags that then break higher, like right here. We push up and we form a little flag, and then we break higher. On these pushes up, we tend to do a good job of squeezing higher and creating a flag, breaking higher, and so on. And this is normal for a trend up. However, just to put our time frame in check, please remember that my time frame is in the day. So when I'm speaking short, I'm not really talking about, hey, this is going to plummet to 2,700 or something like that. I'm not a swing trader. I'm not a position trader. I'm simply looking at what is likely to happen in the session. Now, the trend, the overall day trend, is clearly to the upside. However, let's bring this stuff back. You can see from the most recent composite that 30.73 is so there's 30.92 right here. 30.92 is this peak in the volume profile, and then 30.73 is the POC, the point of control of this composite, and that is kind of like the big magnet. This is kind of like having a big celestial body, big planet with a lot of gravity, right? So the market on any failure lower is likely to be attracted to this area for consolidation, and then is likely to test through the low volume node to the next key area below that, which is 3060, and the next key area below that is 3039. And so that's what we need to keep in mind, kind of the big picture stuff. So that's how things are kind of shaping up. 3073, and then below that 3039 are the next big areas. Where do I get the 73? Again, that's the point of control of the upper distribution. Oops. And then the 3039 is the next balance area. This is the next balance area that occurred between October 28th and October 31st, and its point of control is right here at 3039. Okay, so that would be next after 3060. If we don't get a bounce, consolidation and bounce at 3060, we would target 3039. This is kind of like the logic I use for options trades. Weekly options, go 3 weeks out, and if there's enough volatility, then I would be looking for those key areas as targets. What did we do overnight? Overnight, we opened back up. We tested the prior close by a couple of ticks, and then turned over. The overnight inventory is 100% short, and we have pushed below the prior low at 3083. The point of control overnight, the most traded price overnight, is also 3083, and the market's trading that 3082.83 area. The profile overnight shows that there's a little bit of balance between 3087 and about 3077. And the range was pretty good. The volume was pretty good too, 204,000 in the overnight session. There's a pretty good participation, especially once the European markets open. Of course, I did mention those big releases, the big releases overnight from Europe, inflation rate and things like that. And so what we've done is we've had an impulse down right here in the European markets, and we're pulling back to the mid of the whole session, but it's already exceeded the natural expected pullback area, consolidated here. This is the mid of the impulse plus this low from earlier, and it didn't hold. It kind of started to continue to creep higher. As it pushed towards the mid. Let's take a look real quick at the order flow. You can see that the move down really had pretty good delta, negative delta in it. There's quite a bit of hitting. You can see that this is a clear impulse, a small continuation, a double test right here, and then we've started to move to correct, and we're moving towards that 3085, which was basically the scene of the crime for the drop. And the low of day from yesterday is 83, and we're starting to move back up there. The overall liquidity is a little bit thicker at 3075. That's been sitting here for the entire session, 3075 below, and then beneath that, 3070 had a little bit of volume in it. It's not showing up here because of the color distribution. Actually moved to 3072, and then above 3093, and the prior close is 3092 and a quarter. Those are the key areas. We've got a little bit of play here at 85, 86, and 88 as areas. Now remember, just because it's there and it's nicely colored does not make it an area that we engage in a trade. Although knowing where the liquidity is and what the order flow is showing is a tremendous help in entry, right? It gives us a little more to work with in terms of getting a good entry. Let's take a look at what we're expecting for today. So for today, and I want to remind everyone as soon as I'm done with this, and I'll post a link to sign the petition to get the CME to release the micro crude contract. So here we are at the prior low, at the point of control, which was also the prior low. The expectation here is an open auction that is responsive. I'm looking for the market to actually continue higher towards yesterday's close and potentially pushing into this 30.90 area. Might not get to 92, but at least 90 is expected. I expect it to consolidate and then roll over and start pushing towards the overnight low for a test towards 73.25. That's the primary scenario. That's what I'm expecting the market to do. Now, here's the trouble with that. We are right in the middle of balance. This is all balance. In fact, it goes back even farther. Balance, we've been in balance here for some time in this area, even though we're making new all-time highs. With all-time highs, we generally sell off almost immediately. You can see that we made this all-time high at 30.97, and then sellers come in, some profit taking, and I'm expecting that to continue and bring us back into balance at the MC point of control of 30.73. That's where that primary scenario, this is the natural process given the way we closed yesterday. This is the natural process expected. The secondaries, we open and we push down to continue that push from the overnight session, push down, consolidate, potentially take out the overnight low, impulse up, come back into the range, walk up, walk right back up to where we closed yesterday and finish inside of the range. This is buyers. The argument behind this is buyers seeing lower prices and buying the dip. So until the market decides somewhere in here in the first 15, 20 minutes, which side is likely to get a win and what is tested originally or initially, until then, I really don't have any business getting into a structured trade. Scalping, maybe, but a structured trade, I need to stay away and let the market set up because it could go either way. Yesterday was an all-time high, don't forget that, and we pushed through 3,100, and now we're all 20 points below that. So this may be good pricing for buyers to continue to accumulate in line with the longer-term trend. I don't know. We'll see what the market does, and we'll respond to it. One more thing. As I said, I wanted to get you all to sign this petition for the MCL. I'm putting it in the chat window here. MCL petition, please sign. And there's the link. Please take a moment to sign that. I'm trying to get this to a couple thousand signatures. If you know friends who can sign this, please have them do that. We'd like to get as many people signing this as possible so we can release this product. This conversation with the CME about this product started taking place earlier this year in the summer. I met with them a couple of times, and it's something that's on their radar. We just need to kind of show demand for it so we can accelerate the process as it takes a while to release a product. Okay, please help us out. It's crude oil after the S&P for day traders. After the S&P and the NASDAQ, crude oil is really the next most traded product. And we want to use a 1/10 size product to keep people in the business of figuring out their plan while they're trading live rather than living in a sim environment. Good luck. I will not, for Convergent members, I will not be in a chat room today. I'm doing a video shoot with Anthony Crudele, and we'll be gone until the afternoon. Good luck.